Hey everyone, and welcome back to IQD Dinar News, your #1 source for authentic Iraqi dinar updates. If you're just joining us, hit that subscribe button right now, because what I'm about to share with you today is something every single dinar holder needs to hear immediately. Before we get into the numbers, I need you to pay very close attention to what happened overnight in Iraq's currency markets. If you checked the exchange rate yesterday and thought everything was stable, well, I've got news for you. The US dollar just made a significant jump that's got traders, investors, and market analysts all talking. We're not talking about a small fluctuation here. We're talking about a 350 dinar increase in just one trading session. That's right, 350 dinars. And if you're wondering what that means for your holdings, your investments, or your business operations in Iraq, you're in exactly the right place. Here's what makes today's update so critical. When we see movements of this magnitude, it's not just random market noise. It's telling us something important about supply and demand dynamics, market sentiment, and potentially broader economic forces at play in Iraq. This is the kind of movement that separates those who are casually watching the dinar from those who are seriously tracking it with authentic, reliable information. And speaking of authentic information, everything I'm about to share with you comes directly from Shafaq News Agency's latest market survey, one of the most trusted sources for Iraqi financial news. So whether you're holding dinars as a long-term investment, you're conducting business between the US and Iraq, or you're simply trying to understand where the Iraqi economy is headed, stay with me for the next 15 minutes. I'm going to break down exactly what happened, why it matters, and most importantly, what you need to know moving forward. This isn't speculation, this isn't rumor. This is factual market data with the context and analysis you need to make informed decisions. Let's dive in. All right, let's get straight to the facts because these numbers are significant. According to Shafaq News Agency's comprehensive market survey, the US dollar opened Wednesday's trading session at a notably higher rate across both Baghdad and Erbil. We're looking at an increase of 350 Iraqi dinars compared to the previous session. Now, to put that in perspective, that's one of the more substantial single session movements we've seen in recent trading periods. Let me break down exactly what's happening in Baghdad first, because this is where we can really see the impact of this movement. At the Al-Kifa and Al-Harithia exchanges, which as many of you know are the two most prominent and reliable currency exchange centers in Iraq's capital, the dollar is now trading at 148 dinars per 100 US dollars. Now remember, in our last update, we were looking at 147,650 dinars. So we've moved from 147,650 to 148,000. That's your 350 dinar jump right there, and it happened in a single trading session. For those of you who follow currency markets regularly, you know that a 350 dinar movement in one session is noteworthy. This isn't the kind of gradual drift we sometimes see over weeks or months. This is a clear, decisive move that happened relatively quickly, and that tells us something important about what's happening beneath the surface of Iraq's currency markets. Now let's talk about what's happening at the street level in Baghdad's exchange shops, because this is where everyday people, businesses, and investors actually conduct their transactions. The local exchange shops in the capital are now selling the US dollar at 148,500 dinars per $100. So if you're someone who needs to buy US dollars, whether for travel, business, or investment purposes, you're paying 148,500 dinars per $100. On the flip side, if you're bringing US dollars into Iraq and converting them to dinars, the buying price is 147,500 dinars per $100. Let's pause here for a moment because this spread is really important. We're looking at a 1,000 dinar spread between the buying and selling rates in Baghdad's exchange shops. That's the difference between 148,500 and 147,500. This spread represents several things. It's the exchange shop's operational margin, yes, but it also reflects market volatility, liquidity conditions, and perceived risk. When we see spreads of this size, it often indicates that currency dealers are building in a cushion to protect themselves against rapid market movements. And given that we just saw a 350 dinar jump in one session, that makes perfect sense. Now let's shift our attention to Erbil, the capital of the Kurdistan region, because the comparison between Baghdad and Erbil always gives us valuable insights into how integrated and stable Iraq's currency markets really are. In Erbil, the selling price has reached 148,200 dinars for every 100 US dollars, and the buying price stands at 148,100 dinars. Do you notice something interesting here? The spread in Erbil is much tighter than in Baghdad. We're looking at only 100 dinars difference between buying and selling in Erbil compared to 1,000 dinars in Baghdad. This tells us several important things. First, it suggests that Erbil's currency market might have better liquidity at the moment, or perhaps currency dealers there are operating with different risk assessments than their counterparts in Baghdad. Second, it shows us that despite the overall upward movement of the dollar, different regional markets within Iraq are responding with their own particular characteristics. This isn't a monolithic market we're dealing with. There are regional variations, local supply and demand factors, and different operational dynamics at play. Another crucial observation, both markets moved in the same direction. The dollar strengthened against the dinar in both Baghdad and Erbil. This suggests that whatever forces are driving this movement aren't localized to one region. This is a broader market phenomenon affecting Iraq's currency markets as a whole. So now comes the question that I know everyone is asking: why did this happen? What caused the dollar to jump 350 dinars in a single session? While Shafaq News gives us the precise market data, understanding the underlying causes requires us to think about the various factors that influence exchange rates in Iraq's unique economic environment. First and foremost, we have to consider oil revenues and dollar inflows. Iraq's economy is fundamentally dependent on oil exports, and those exports are denominated in US dollars. Any changes in oil production export volumes or international oil prices directly impact how many dollars are flowing into Iraq's economy. If there's been any disruption in oil exports, any delay in payment settlements, or any shift in Iraq's oil production levels, that affects dollar availability in the local market. When dollar supply tightens relative to demand, we see exactly what we're seeing today: the price of dollars in dinar terms goes up. Second, there's the Central Bank of Iraq and its daily currency auctions. The CBI conducts regular dollar auctions to help manage liquidity and stabilize the exchange rate. These auctions are a critical mechanism for distributing US dollars throughout Iraq's financial system. If the CBI has reduced auction amounts, tightened eligibility requirements, or made any procedural changes, that can immediately impact street market rates. Currency dealers and exchange shops often look to the CBI auctions as a benchmark, and any changes there ripple through the entire market. Third, we need to think about import demand and trade dynamics. Iraq imports a massive amount of goods, from food and medicine to machinery and consumer products. Importers need US dollars to pay their foreign suppliers. If there's been an uptick in import activity, perhaps due to seasonal factors, reconstruction projects, or increased consumer demand, that drives up the need for dollars. When more people are competing for the same pool of available dollars, prices rise. Fourth, regional and political factors play a role. Iraq operates within a complex regional environment, and political developments, both domestically and in neighboring countries, can affect investor confidence and currency market behavior. Any news about government policy changes, budget disputes, regional tensions, or international relations can cause traders and businesses to adjust their currency positions, and that shows up in exchange rate movements. Fifth, we can't overlook speculative activity and market psychology. Currency markets aren't just driven by fundamental economic factors. They're also influenced by expectations, sentiment, and trading behavior. If currency traders believe the dollar is going to strengthen further, they might start buying dollars in anticipation, and that buying pressure itself drives up the price. It becomes a self-fulfilling prophecy to some extent. And finally, there's the simple matter of supply and demand imbalances in the short term. Perhaps there was unusually high demand for dollars on this particular day, or perhaps supply was constrained for any number of operational reasons. Currency markets can experience sharp movements when supply and demand get temporarily out of balance, even if longer-term fundamentals haven't changed dramatically. The truth is, it's likely a combination of several of these factors working together. Currency markets are complex systems where multiple forces interact simultaneously. What we can say with confidence is that a 350 dinar movement in one session indicates that something significant shifted in the balance between dollar supply and dollar demand in Iraq's markets. Now let's talk about what this really means for you, especially if you're actively involved in Iraqi dinar holdings or transactions. This is where the rubber meets the road, and this is why staying informed with authentic, timely data matters so much. If you're holding physical Iraqi dinars and you've been considering converting some or all of them to US dollars, today's rates mean you're getting fewer dollars per dinar than you would have gotten just yesterday. The dollar has appreciated, which by definition means the dinar has depreciated in relative terms. To put it simply, your dinars have less dollar purchasing power today than they did in the previous session. That's a straightforward mathematical reality when exchange rates move this direction. For businesses operating in Iraq or conducting trade with Iraqi partners, this movement has immediate practical implications. If you're a business that needs to bring US dollar to Iraq to pay for local expenses, operations, or investments, you're actually in a better position today because you'll receive more dinars for your dollars. On the other hand, if you're a business trying to repatriate profits from Iraq back to the United States, you're going to get fewer dollars for your dinar holdings. The direction of your currency flow matters a lot in determining whether today's rate movement helps or hurts you. For long-term investors in Iraqi dinars, the key question is always about trend direction and sustainability. Is this 350 dinar jump the beginning of a longer-term trend where the dollar continues strengthening against the dinar? Or is this a temporary spike that will reverse in coming days or weeks? One data point never tells the whole story. This is exactly why we provide regular updates from authentic sources like Shafaq News Agency, because tracking patterns over time is how you develop a real understanding of market direction. Here's something else to consider: the psychology of exchange rate movements. When people see the dollar strengthening significantly in one session, it can create momentum effects. Some holders might rush to convert their dinars to dollars, fearing further depreciation. That very action, if enough people do it, can push the rate even higher. Conversely, some might see this as a temporary spike and an opportunity to acquire dinars at relatively favorable rates. Understanding these psychological dynamics helps you think through your own decision-making more clearly. One thing I want to emphasize, and this is really important, is the difference between price movements and underlying value. Exchange rates fluctuate constantly based on immediate supply and demand conditions. But the long-term value of a currency is ultimately tied to the strength and fundamentals of the underlying economy. Iraq has substantial oil reserves, a large population, and significant economic potential. Short-term exchange rate fluctuations don't change those fundamental realities. What they do is create pricing dynamics that can present either opportunities or challenges depending on your specific situation and time horizon. Let's also talk about the practical realities of executing currency transactions in this environment. With spreads as wide as 1,000 dinars in Baghdad's exchange shops, timing matters. If you're someone who needs to conduct a currency transaction, you're essentially paying a significant premium for the convenience and immediacy of using street-level exchange shops. For larger transactions, it might be worth exploring whether there are ways to access more favorable rates through banking channels or other mechanisms, though I recognize that's not always practical or possible for everyone. Looking at the broader picture, what does today's movement tell us about the stability and functioning of Iraq's currency markets? On one hand, a 350 dinar jump in one session shows that there's definitely volatility in these markets. They're not completely stable or predictable. On the other hand, the fact that we have transparent, consistent reporting from established exchanges with rates that are broadly similar between Baghdad and Erbil shows that there is a functioning market infrastructure. Information flows, prices adjust to reflect supply and demand, and market participants can access current rates. That's actually a sign of a market that's working, even if it's working in a volatile way. All right, let's bring this all together and talk about what you should take away from today's update. We've covered a lot of ground here, and I want to make sure the key points are crystal clear. Today's update from Shafaq News Agency shows us a significant movement in Iraq's currency markets. The US dollar jumped 3 or 50 dinars in a single trading session, moving from 147.6050 to 148 dinars per $100 at Baghdad's major exchanges. That's not a trivial movement. That's a substantial single session change that reflects real shifts in supply and demand dynamics. We examine the details across both Baghdad and Erbil markets. In Baghdad's exchange shops, we're seeing selling prices of 148,500 and buying prices of 147,500. That's a 1,000 dinar spread. In Erbil, the spread is much tighter at only 100 dinars, with selling at 148,200 and buying at 148,100. These regional differences tell us important things about local market conditions and liquidity. We discussed the various factors that could be driving this movement: oil revenue dynamics, Central Bank of Iraq policies, import demand, political and regional factors, speculative activity, and short-term supply-demand imbalances. Understanding these factors helps you think more clearly about what's happening beneath the surface of the numbers. And we talked about what this means practically for different groups: dinar holders seeing reduced dollar purchasing power, businesses facing different impacts depending on their currency flow direction, and long-term investors needing to track whether this is the start of a trend or a temporary spike. Here's what I want you to remember most importantly. Movements like this are exactly why having access to authentic, reliable, timely information matters so much. If you're making decisions about currency holdings, business transactions, or investments related to Iraqi dinars, you need to know what's actually happening in the markets, not rumors, not speculation, but verified data from trusted sources like Shafaq News Agency. Exchange rate movements of this magnitude don't happen in isolation. They're telling us something about the forces at work in Iraq's economy and currency markets. Whether this particular movement continues, reverses, or stabilizes, staying informed is your best strategy for navigating these markets successfully. Remember, successful currency management isn't about panic reactions to daily fluctuations. It's about understanding context, recognizing patterns, and making informed decisions based on reliable information. That's exactly what we're committed to providing here at IQD Dinar News. No hype, no speculation, just authentic updates and thoughtful analysis to help you understand what's really happening. If you found today's breakdown valuable, please hit that like button. It helps us reach more people who need authentic Iraqi dinar information. If you haven't subscribed yet, subscribe now and turn on notifications so you never miss a critical update like today's. These markets move fast, and having timely information can make a real difference in your decision making. Drop a comment below and let me know, how are you responding to today's rate movement? Are you adjusting your strategy, holding steady, or taking a wait-and-see approach? I read every comment, and I love hearing from our community of informed dinar watchers. Also, let us know what specific topics you'd like us to cover in future videos. Should we do a deep dive on the Central Bank of Iraq's auction system? Would you like more analysis on how oil prices affect the dinar? Do you want us to compare Iraq's currency situation to other oil-dependent economies? Your feedback helps us create the content that's most valuable to you. Until next time, stay informed, stay vigilant, and remember, in currency markets, knowledge is power, and authentic information is your most valuable asset. This is IQD Dinar News, your trusted source for Iraqi dinar updates, signing off. We'll see you in the next update.